Happy Tuesday out there, Team 42. It's your skipper here, Darius to present our macro minute for Tuesday, April 15th, 2025. As always, we'll start with the executive summary from today's lit off morning note. If you would like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is President Trump catalyzing a golden age of investing in non-U.S. assets in gold? Our answers are, yesterday we asked if President Trump was losing his own trade war. Thus far, the answer is yes, and the answer may remain yes at the end of the process for all the fourth-turning polycrisis reasons we detailed in our April 10th and April 11th lead-off morning notes, as well as our April 12th Around the Horn webcast. The chronic combination of overconsumption by U.S. households, overinvestment by U.S. businesses, overspending by the U.S. government, and undertaxing by the U.S. government have left the U.S. economy and asset markets in a very unresilient state amid mounting geopolitical headwinds. All told, the U.S.'s net national savings rate is simply too low for President Trump to bully his way into the U.S. exceptionalism his policies ended, at least temporarily. The U.S. is simply too reliant on foreign capital to grow our economy. For example, the U.S.'s twin deficit, current account, and sovereign fiscal balances total minus 11% of GDP, and is an all-time non-war, non-recession value, all-time low non-war, non-recession value amid foreigners owning 30% of outstanding marketable Treasury securities. To the extent President Trump is still serious about facilitating the fourth turning style transition from paradigm A to paradigm B, the only path forward is to accept that the transition from paradigm A will be painful and deal with it. The constant flip-flopping and lack of clear guidance is little more than a sign of U.S. weakness in global capital war terms. Investors should expect the crisis of confidence in the U.S. dollar and U.S. treasuries to accelerate if President Trump responds poorly to clear signs that he's losing his own trade war and lashes out. In that scenario, the Fed will eventually be forced to step in and backstop the treasury market, ushering in a golden age of investing in non-U.S. assets in gold. And I apologize for not including Bitcoin there, but obviously Bitcoin would be a beneficiary of that as well. We are sympathetic to the view, by the way, that it has already begun. So transition to our 42 macro dashboard. As always, to wrap up the question from our community. This one's regarding alternatives to a debt-based monetary system. It says, hi, Didi. I watched your macro minute and it made me reflect. Would it be possible to transition to a new and better monetary system without total collapse and chaos? The answer is unequivocally no. Sorry. Contrary to tweaking the current system to last a few more decades, could we have a thriving and growing global economy without the financialization of everything, without 50 times leverage everywhere, and without financial institutions that are too big to fail? Yes, you certainly could. It would look very different than what we currently have. And you're talking about a significant global economic and financial market restructuring that will cause a lot of wealth and capital destruction before it ultimately got better. Who knows how long that process could take? I mean, obviously, the Great Depression was took 10 plus years, 10, 15 years before we went into World War II, which yanked us out of the Great Depression. So, those are the kinds of risks that are on the table if you're talking about transitioning the entire world order from a monetary system standpoint. This is a big problem. And again, I'm not so sure that the monetary system is the problem in and of itself, right? The problem in and of itself is everything I just highlighted in the executive summary. The U.S., because we have taken advantage of our exorbitant privilege, we've overconsumed in the household side, we've overinvested in the corporate side, we've overspent on the public side, and we've undertaxed on the public side. That's the real problem. The problem isn't the system. The problem is our abuse of the system. That is the issue. And so trying to fix the system and not acknowledging that the U.S. has lived high on the hog and really abused its exorbitant privilege, in my opinion, I think you're trying to prevent I don't want to use that's I don't have a good analogy, but you're trying to solve a problem that's much smaller by creating a much larger solution than the actual problem itself. So I think there's a lot of talk about stuff like this, but the reality is that's very unlikely to happen. And unless you want a total war, we will have a total war if we try to completely change the entire debt-based monetary system, because there's going to be enough economic hardship to go around to allow for the accumulation of political power by strong men and perhaps even strong women in a very kind of pre-World War II type fascist state. That's exactly what's going to happen if we had that kind of economic hardship. So I just want investors. I mean, I would argue we're kind of close to that already. That's not a political statement, but it obviously is true. terms of the consolidation of power we've seen, not just here in the U.S. but around the world. We have other countries that have similar consolidation of power dynamics in their governments as well. So, these are big questions. Like I said, it's a fun time to be alive as a macro risk manager. There's not a lot of answers to big questions like this. And this is why one of the many reasons why I continue to think investors need to, be reliant on, systematic frameworks to guide them through these, this kind of fourth turning poly crisis, because I don't think you're going to be able to just think of the outcome in your head and paint a credible path forward in market response terms. There's like the dimensionality is just way too much for any investor to kind of, handicap from a probabilistic standpoint and then ultimately position for is too much. I just don't think we're in the middle of fourth turning that's accelerating. I just don't think you can, you got to have an incredible amount of hubris as an investor to think you're going to be able to figure out where this is all headed. And I think 2025 is a year where a lot of investors who had an incredible amount of hubris got a reality check, a dose of reality that they can't possibly figure out where this is all headed. So I'll leave it at that and just say happy Jackie Robinson Day to everybody. Appreciate everybody for humoring us in these macro minutes and kind of just participating with us. We appreciate everybody on Team 42, both inside of our paywall and outside of our paywall. We're really truly committed to our mission here at 42 Macro, which is to democratize. Not everybody says they're democratizing Wall Street, whatever the hell that means at this point. It's, everybody says that, but, we're actually doing it. The high end institutional macro risk management research that our top end hedge fund, pension fund, family office, insurance fund, endowment clients are receiving is the exact same research that our, retail investor clients are receiving, the exact same signals. They have the exact same, tools that they can use, as you can see by our dashboard here. We're super proud of what we built. We're one of the very few, if not the only firm in the world that could say the statement that I just made. And that's exactly what Jackie would have run it. A life is not important except for the impact that it has on others. And that's a quote that really struck with me and resonated with me and my team. And that's why we continue to work so hard for not just the folks who pay us the most money, but for everybody on that distribution, on that spectrum, because it's super important to us and super important to me based on my background. So happy Jackie Robinson Day. Happy tax day as well to those who celebrate and participate. But we'll catch you back here tomorrow. Darius still here signing off on our Macro Minute for Tuesday, April 15, 2025. Have a great day. Catch you back here tomorrow. Cheers.